Good afternoon, Outliers. How are y'all doing today? Happy Thursday. I hope this has been the best week of your life, right? I don't know. I just hope the best for you. Hope it's doing great. Trying to throw a little positivity your way. Hope you don't mind. Couple notes. I am out tomorrow, and Monday's a holiday. I did record a bunch of videos earlier today, so those will still be released on the YouTube channel. You're not going to believe this. I actually found a 10 out of 10 video. I couldn't believe it. So be sure you watch all of them to see which one it was. Because when I got to it, I was like, no freaking way. This is awesome. And I really just like had a great time. So be sure you watch that. Let me think, is there anything else? Any behind the scenes stuff I want to chat on other than that? Mikey Mike had a question. We're going to be talking about that during the live stream about ATRs. We got new stocks in the platform that Mahesh talked about in the Discord. I was going to show that off too. And we have our weekly winner circle. So we'll be doing all that and lots more. Michael Wales is here. Good to see you. Peter, good to see you. Hang on. Something of my stuff changed. The colors are not right. They used to be blue. I don't know. When you're on the spectrum like me, you're like, no, it has to be right. Spat if. Ooh, do you have a plaid, my friend? I don't have a plaid. I have a Model Y Performance, and it's like painfully fast. I keep it in chill mode all the time because like the default mode is sport mode, and it does 0 to 60 in 3.2 seconds. It's so fast. Like you accidentally hit the gas, and it's like blah. Like it's brutal. So I can't imagine what a plaid's like. John James, how you doing? Glad you made it. Hadn't seen you here before. Mari, glad you're back. Dave, good afternoon. Mikey Mike, the man, the myth, the legend himself. How's business, my friend? Hey, Mikey Mike, on that topic, would you like us to send you some business? Just let us know in the chat. We'll try and help you out if we can. Randy, glad to see you. Happy Thursday. Jean-Louis here. Mikey Mike says, you hit the electric. Oh, that's right. That's right. Okay. It's not you hit the gas. Dude, listen. I talk about like putting gas in the car and all that stuff all the time. So yeah, I get that. You totally nailed me on that one, Mikey Mike. Well done. Okay. Let's get started here. Oh, and we're going to cover, oh, wait a minute. My background's gone. See, things are acting weird in StreamYard today. There we go. We're going to be covering 2 videos today as well. Just because I can. I run this show. The accelerator. That's not as fun as saying the gaserator. The electricalator. There we go. Hello from Portugal. Sergehorpt. Hello from Portugal. Send business. Alan, good to see you. Good evening, my friend. Let's do this. Welcome to the Outlier Trading Room. My name is Christopher Yule. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where we save time, make money, and start winning with less risk together as a team. But before we start trading, let's get into the lesson of the day. All right, so be sure to stick around to see how these 2 videos rank out of 10, and go ahead and subscribe if you haven't already. So first video we're going to cover is SoFi's lending segment is seeing explosive growth. Now, you're probably asking, why do I cover these stocks all the time? Because it's what the internet wants to talk about, okay? SoFi, Palantir, AMD, like these videos are popping off. So by God, I'm going to be talking about them as well. So here we go. SoFi's lending segment is seeing explosive growth.
Fantastic day as SoFi continues to push higher. $16.25. We're up 4.7% right now. Potentially even pushing a little bit higher.
Higher than that right now. It's up over 5% at the moment.
It's because of this news right here. SoFi and PGIM, which is one of the largest fixed income managers, is now announcing another $525 million securitization agreement with SoFi to end up packaging up their personal loans, or a percentage of them, and selling it to their investors. Okay, so think about this like a mutual fund or something like this for stocks. This is sort of what's happening. So SoFi users that are actually wanting a personal loan will, depending on their cash flow, their FICOs, and their income, will get a certain.
Okay, so I'm going to break this down from a different perspective, right? SoFi is seeing huge growth in their loans, right? That's awesome. I'm concerned. I'm concerned from a market perspective. I'm concerned from a macro perspective. If loan growth is going up, I do a lot of work with financial institutions. Deposits are going way down, right? I mean, all excess deposits that have been put in COVID are gone, and some. If loans are going up, deposits are going down, that gives me concern, right? That may not be great to the American consumer if they're looking for if they're expanding out of traditional places to get loans and going to new places like SoFi to get loans. That makes me nervous. That tells me that things are not all hunky-dory, right? There's economists who would say people go get loans because they want to buy stuff because they're so stinking happy, they're so excited to go buy things. And then there's other economists who fall in line with what I think, which is the right way to think, of course, which is if people are going to get loans, they don't have money. And if they don't have money, that's not good for the American economy. So SoFi's lending segment seeing explosive growth, I don't know, gives me a little bit of hesitation. Peter from the Netherlands says, P.S. I saw the OVTLYR website improved as well. Good job. I had nothing to do with it, but I'll tell Mahesh. Modern look is easier on the eyes. Oh, very cool.
An interest rate attached to that loan as that's the agreement that they made with SoFi. But now SoFi is packaging that up and saying, hey, if you want this interest rate and look at the amount that we actually lose on the other end and our cost of funding, would you like to buy this loan from us so then you can sell this out to your investors? So that's exactly what this is.
Okay. So we're going to get in some deep financial terms right here, right? So what he's talking about are collateralized debt securities, okay? You may have heard them as CDSs. A lot of the times it's MBSs, mortgage-backed securities. Like we're gonna nerd out real hard real quick. So these collateralized debt securities, what they do is they package it up and they say, okay, Michael, would you like to be an investor in these loans, right? These loans pay on average, let's use a round number, 5%. And we'll give you a portion of that if you want to buy it. And Michael's like, okay, seems like a decent investment. So now Michael has taken funds out of his institution and bought CDS's collateralized debt securities from SoFi in this case. Imagine it like, sounds complicated, but imagine you go get a CD from the bank. Okay. The bank is going to pay you 3.5% interest on that CD for the next 24 months. It works equivalent to that. Okay. But we're bundling up loans to sell. This is not anything new. This has been done in the banking industry forever and ever. And is exactly what broke and what exploded in The Big Short, right? This is what brought down the whole banking industry in 2008. Not saying that that's going to happen again, but this is nothing new.
Securitization is, okay? Now, it's interesting. There's a couple details here that I find very cool. One, this agreement closed in Q4 of 2024, which if we actually look back on their last transaction, because this is not the first transaction that they've done with PGIM, okay? They did a separate $350 million agreement already in 2024, okay? So the agreement was actually signed in Q1 of 2024, but actually ran through all the way through Q3 of 2024. So think about these loans as essentially being spread out across a 6-month period. So if that is what's happening here as well, we could be seeing Q4 with benefits of this sale going all the way through Q2 of 2025. Okay, so hopefully we see some benefits of this sale in 2024, but it'll mainly be in 2025, I believe. Now,
it's not, I mean, all that they're doing is selling. They're basically selling a CD to a different institution. If you want to boil it down to the easiest way to understand what they're doing, they're basically selling an investment to another institution. It's not. There's nothing groundbreaking about this. Michael Wales is also saying, yeah, that's right. My concern's been the discretionary sector. Has been the only one in the uptrend, right? And that's where people are taking out loans to buy stuff. Dave says, everyone should watch The Big Short to get a better understanding of the mortgage market. It is a great movie. It really is, yeah. Brandon Havens, twice in 1 week. Let's go. Wes, hello.
What I think is so amazing about this deal especially is, one, what happened to the fair value of SoFi's loans, right? Are they written so poorly that the banks and asset managers that are coming and buying our loans, are they not seeing the fact that...
Okay, I'm glad you put on there, this is sarcasm.
These are poorly drawn up and that the quality of these loans are actually worse than what they expect? I mean, PGIM must have learned from the first time that they bought our loan. Why would they be coming back with an even larger purchase agreement? Before it's 350, now you're doing $525 million with SoFi. What happened to fair value? What happened to all these $4 bears that said that our loans are crap? I guess the company that...
Now, I don't know about that. Right. I don't know what the credit standards are of those loans. I don't know anything about that, but I'll tell you one thing: it doesn't take much, right? I recently worked with a institution in Atlanta that is gone. They don't exist anymore, and the reason that they are gone is because their delinquencies were 10%. Okay, and you're thinking, 10%, whatever, no big deal. The industry standard is like 1, right? 1% delinquencies. So they had 10 times as many delinquencies as normally an institution would have, and they went out of business, right? The NCUA, the National Credit Union Administration, came in, took them over, said, you can't do business anymore because you don't know how to make loans. So I'm not saying that that's what's happening at SoFi, but if they get something like 4, 5, 6, 8%, 9% delinquency rate, which, I mean, I mean, honestly, if they're making loans to shit borrowers, then that's what's going to happen. So I don't know. I don't know the details about that, but mark my words, this can happen. I have seen it happen in the last quarter. I've seen it happen. So it's not something that doesn't happen on the regular. Hey, that guy. It's that guy
that has nearly $1 trillion doesn't think so and wants just a little bit larger of the slice of pie with SoFi. The interesting thing that I've learned while researching SoFi is that a lot of their loan purchases don't come from a bunch of different names. The customers that actually come to buy loans come back for more loans. Okay, so we try to get more names if we can, but really it's about strengthening these relationships with companies like PGIM, BlackRock, Fortress. These guys are going to come back and continuously purchase our loans from us. So this is just another, indication that that is very much the case, is that we're deepening relationships with SoFi, and they're actually really thrilled about this. As what Edwin says here, the co-head of securitized products at PGIM, he says, SoFi's personal loans represent an attractive investment opportunity for PGIM, and we're thrilled to deepen our relationship with the company.
Like I say, to them it is an investment. It is equivalent to you walking into your bank and saying, I want a CD for $50,000, right? On the nutshell, in a nutshell, that's how I would try and translate that for you.
We continue to expand our platform as an asset-based finance lender and source investments that provide compelling risk-adjusted returns for our clients with partners who put their customers first. Definitely not.
My eyebrow went up when he said risk-adjusted returns. So what that means is financial institutions have a rating scale, right? You're going to have like A credit, B credit, C credit, D credit, whatever. A credit might get an interest rate at 5.0%, B 6.0%, C might get 8.0%, D might get 11.0%. That one line right there kind of tells me that they may be pushing more CDE credit than AB credit, which is not exactly where you want to be. I don't know though, just speculating based on that one line right there.
Not a bad shout out to SoFi. And then Anthony Noto also says that the investment demand for SoFi's personal loans underscores the quality and strength of our lending business, which contributes meaningfully to our durable growth. But we have to remember, this is not a loan platform deal like what they're talking about down here with Fortress. This is an original securitization. So we could have done this even before Q3, like we've done previously with PGIM. It's good to know that one of the big bear cases for the loan platform business that SoFi has recently started to push out was that it might be cannibalistic to their old sources of wholesale selling loans or securitizing loans. Well, it actually turns out that, they are still looking to have pretty sizable markets to securitize their loans with, existing partners. But let's go back and remember this article right here. Eric Schopenhauer, who bought essentially $500,000 worth of SoFi shares. And
I am within a stone's throw of this. That's really funny. I had no idea. Are you telling me SoFi is like literally a block away from me? I had no idea. Oh my gosh, I got to run by there. That's so funny.
He is the executive vice president of the lending department on December 16th. Was this deal sort of in talks, and did they know that there was a lot of these transactions that were essentially going to be boosting up SoFi? Obviously, I'm not insinuating that there was some insider trading here or anything, but it definitely looked good timing that SoFi's head of the lending department was being so bullish on the company, and now we're seeing potentially why. Now, this wasn't the only thing that was very exciting from SoFi today. In fact, there was a piece of news that came out that was not SoFi's doing, but it does benefit SoFi, is just to show off how bullish the market is on this company right now, as Defiance is now putting out a daily 2x long SoFi ETF, or essentially...
Oh, man. Okay. Whew. So now we're getting into really speculative territory here. right? If people are like, oh, I'm gonna go, 2x leverage on SoFi, right? I don't know. Does SoFi have options? I've not even checked, right? What am I trying to say? Leveraged ETFs are dangerous. That's what I got my start in trading, actually. But leveraged ETFs are extremely dangerous because the leverage always goes to zero. I know it's like, how is that possible, right? Well, hang on. Let me Google this up. Let me see if I can find it real quick. Leveraged ETFs always go to zero. Hang on. What happens to a leveraged ETF if it dips to zero? The real reason is not to hold. Why do leveraged ETF? There we go. So why do leveraged ETFs decay? Okay. I mean, we could watch that video. What is leveraged ETF? What is it? Hang on. I clearly I wasn't planning on talking about this. I want a chart. Show me a chart. I want to show you what I'm talking about here. Terrible content. I know. All right, so let's do the math behind it. Right, let's do the math. I'll show you what I mean. Okay, so imagine you're in a stock and the stock's trading at $100, right? And then you've got a 2x leveraged ETF. Okay, so if it moves 1%, your ETF will move 2x. Okay, 2x leverage. Look at this. I'm gonna teach all. This is gonna be a long episode today. I'm gonna teach you a lot of stuff. Okay, so imagine that this goes, let's say it goes down 5%. Okay, so you've got this times 1 minus this. I did that wrong, didn't I? 1 plus this. There we go. There's your $95. Okay, so a 2x means it's gone down 10%, right? And the way that math works, crazy. The way that math works is that when something is down, this will be easier on TrendSpider here. When something is down 50%, I'm not calling for a crash. I'm just using this as a demonstration. When something's down 50%, for it to get back to where it was, it now has to go up 100%. Okay. Your stock goes from 100 down to 50. It now has to double to go from 50 to 100. The reasoning that leveraged ETFs are a terrible idea, except in the short term. I mean, a handful of days, a couple of weeks, sure, is because that compounds against you the entire time you own it. The entire time that you own it, it compounds against you. So I would stay away from leveraged ETFs as much as you possibly can. And listen, this is coming from a guy who started trading on leveraged ETFs. So avoid those at all costs. And then SoFi X, having a 2 times leveraged ETF, really gives me some concern that this is getting really, really, really hyperbolic. Very, very, what is the word I'm thinking? God, the animal spirits are running really rampant with SoFi. That guy says, between all the bullish SoFi YouTubers, this one is the most informed. Cool. Sounds good to me. Very speculative stock, though. Yeah, for sure. Yes, they are dangerous instruments. That guy says, yeah, I also started trading with futures, made a bunch and lost it all in that gas. Okay. And TQs, right. I've seen investing strats around leveraged ETFs for NASDAQ based on the MAV. So let's
for every share of this, you're actually taking double leverage on SoFi, but essentially a 200% beta, essentially. So if this was to fall, you'd fall by two times the amount. If you were to increase by 10%, this will potentially run by 20%. Okay. There is a little bit of caveat to whenever you're buying these 2x leverage funds, is that if SoFi was to literally get cut in half, 50% in a single day, or even by 99% in a single day, by some weird metric that ends up happening, that the company would be fine. They would continue to try to grow, and potentially they can rebound later. With these types of funds, not only do you have high, fees for actually holding them, because for them to actually get this margin, you're essentially buying margin with your ETF here, or with your stock, that if it drops by more than 50% in a single day, SOFX just simply goes away. Because the way that the double leverage,
we've seen that. I forget, there was one that happened not all that long ago. It was a VIX ETF. VIX ETF. Hang on. It was a VIX ETF exploded. It was a VIX ETF that exploded. Volmageddon. What was it? God, I can't remember the exact ETF it was. But it was an inverse VIX ETF, and it did exactly that. It SVIX and UVIX, I believe is what it was. Either way, yeah. These leveraged ETFs can just blow up overnight. The XIV, maybe not. I can't remember, but it was a leveraged VIX ETF, and it literally disappeared overnight because of this type of move that he's talking about here. So I would absolutely stay away from I would stay away from SOX X. I wouldn't invest it with your money. I wouldn't buy that with your money. So let's give this video a ranking. I feel like that was a solid 6, right? He brought receipts. He wasn't overly bullish, where some of these videos we watch are just like the biggest pumpers in the world on a stock. I feel like he brought lots of good information. We learned something. We got to talk about the banking industry. We got to talk about leveraged ETFs. So I'm going to rank this a solid 6. How would you rank this? Randy, watch out for covered call ETFs as well. Oh, I hadn't heard that. Watch channel DE made it. How you doing? All right. So let me know what you think of this video. Give it a ranking. And then we're going to go to the second one here. This one is called Palantir Urgent Warning. Do this now, from the Invest with Corey channel. Now, several of you guys have actually asked me to take a watch on Invest with Corey. So I thought I would. Randy says it was me. A 6 from that guy, a 6 from Dave. Let's see what the Palantir Urgent Warning is. Oh, I forgot to tell you the best part of SoFi. We have it in OVTLYR now. As of today, we have SoFi in OVTLYR right now. How sick is that, right? And it even is sitting on a buy signal right now. The fear and greed heat map had been going down, though. It's not looking super greedy at the moment. So anytime that I see the heat map moving, what I want to see is, if I'm long a stock, I want to see it moving up, right? And we are not seeing that so much. So if this does turn around and people start getting more greedy with SoFi, which I don't know how they could get more greedy, right? It's this stock's been on the craziest run. I would be a little bit cautious, right? In fact, for me, I know I wouldn't have traded this anyway. So let's do this video here on Palantir, which we also got in OVTLYR as of today. And I was checking this one out too. Palantir, like it's fallen off a cliff, right? It was around $83 a share, really peaked on the greed on the heat map, and then just like crash, right? And you can see it right down here. It's really getting deep into the fear territory. So let's see what he has to say on Palantir. Let me catch up on the chat real quick. Sir Corp says a 6-2. Mari says 6. Michael says 6. That guy says you need to react to Felix and Friends. Okay. Full transparency. I watched a Felix and Friends video. Like I said, I'm out tomorrow. I'm out on Monday. So I was doing a bunch of them this morning. I watched a Felix and Friends video, and it was my first 10 out of 10. I'm not joking. I was so impressed by it. I was like, this guy knows what he's talking about. This is not the normal YouTubers that are talking about pumping up every stock out there. Felix and Friends knows his shit. And it was cool. I enjoyed that. The P on Palantir is around 181. Dude, who cares about fundamentals? Price is all that pays. Cedric, amazing video as usual. Dude, you're the amazing one. Thanks for being here. You ever talked about the Uber robo-taxi pandemic? No, I have not. Sebastian, OVTLYR takes forever to load. I know. So we pushed some new upgrades, Sebastian. I know. Mahesh is well aware that it is going really, really, really slow. So this is something we're actively working on right now. But thanks for letting us know. All right, so Palantir, urgent warning, do this now.
Analysts gave a price target of $28, saying Palantir was overvalued and could drop as much as 56%. Don't worry, I'm going to explain in this video why it's manipulation to get you out of the stock so they can get in cheap. Don't worry about smashing the like button.
I hate that. I have not watched anything about Corey. I'm 16 seconds into this video, and my eyes nearly rolled back into the back of my skull. I hate when people say, it's manipulation, it's the market makers, it's this or that. Bro, don't come up with excuses, right? The trend, let's look at the trend of Palantir. The trend is down, my friend, okay? The trend has the 10, the outlier trend template is the 10 period, the 20 period, and the 50 period, right? When they're all pointing south, then it would be a bearish trend. And this actually did recover the 50 period right here, right? It was a beautiful bounce right back off that 50 period. But to me, this is a sideways to down trend. But don't give me a break with the... I get really worked up when I hear people making excuses, right? Or when I say when they say a stock should do this. Oh, that is the most nails on a chalkboard word to me when it comes to trading or investing or whatever. Is the stock should do this. Who the hell do you think you are to tell the stock what it should do? Really? The stock's going to do what it's going to do. The market can stay irrational longer than you can stay solvent. And the last thing I want to do is sit there as my markets or my money's evaporating. Let's say, I don't know how far it's down. It's only down 24%. It's come back a little bit. It's down at the moment. It's only down 17% from these highs here. But it's the market makers. They're trying to scare you out of this stock. No, bro. Come on. Actually, I do want to look at the analyst ratings real quick. Pop that open here in Outlier on Palantir. Since we got it, let's take a look. Morgan Stanley, about 10 days ago, says underweight. Underweight means they'll buy some of it, but they're not putting a lot of weight behind it. UBS says neutral. Robert W. Baird says neutral. Argus went from buy to hold. I mean, not a single one of these is very bullish. I mean, the last bullish one I see is from June 17th, and they changed that rating in November from buy to hold when they initiated a buy. So, please don't make this that kind of video where I feel like I'm gonna just like throw my monitor out the window. Please don't do that to me, Corey.
Button or subscribing. We're looking for the coaching and Discord link. We'll get to that very, very soon. First, before we get into today's video, this Friday, I'm hosting my free
Skippy.
But it's been sliding a lot over the last couple of weeks. Why is that? Well, one of the reasons is the simple fact that there's been some insider selling. Alex Karp also sold a lot of shares. But in addition to that, Palantir is facing the same thing every other stock in the stock market is facing right now. And that is the headwinds of uncertainty with the election, the tariffs, the inauguration, things surrounding president-elect.
Right. And also the whole market's being weak, right? So it's not like it's that unusual. I mean, it's more unusual to see a stock with incredible strength right now as the market is falling than to see a stock moving with the market, right? That's not unusual to me.
Trump, as far as those criminal charges, we have the issues and geopolitical tensions around the world. Crude oil is up. The 10-year yield is also up and now starting to settle. We were waiting on inflation data, which PPI data came out much better than expected yesterday. Then we have core inflation and inflation data for year over year and month over month that came out today. And there's a lot of other things going on in the market. But Palantir has held on pretty good considering a lot of the other stocks have slid a lot more. Palantir is also a heavily volatile stock and it's traded in the S&P 500. And now Palantir has more institutional ownership than it did before. Now, this analyst gave a overvalued and a buy rating at $28, showing that there's a potential.
Oh, that one hasn't made it in Outlier yet. Who said that? Hang on. Where's it at? Analyst ratings open right here. Yeah, that one's just not an Outlier yet.
Potential downside of 56%.
Wait.
I don't think $8. Now, this analyst gave a overvalued and a buy rating at $28.
28. I didn't even, the math didn't math for me for a moment. Palantir is a $70 stock right now. 70, not 17, 70. So this person put out a rating at, I'll buy it when it's at 28. Holy moly, when it's down 59% from this point. Okay, let's go. This just got wrecked.
Showing that there's a potential downside of 56%. I don't think this is going to happen. If Palantir ever dropped below $50, I would be loading the boats. This is a great stock, and this year, the stock is going to be well into the $100 range as we get into summer and fall. And
please, if anyone on the internet tells you a stock is going to be whatever price in the future, do me a favor and completely unsubscribe. Don't listen to anything that they say from that point forward. They don't know. They don't know. That is their guess, right? Their guess is just as likely to happen as that $28 guess, right? His $100 price target that he has later this year is just as valid as the $28 price target that the analyst put out. Price targets are meaningless, absolutely meaningless. All that pays is price, okay? Price only pays, or only price pays. So Corey, we can't be friends. I'm sorry, but I'll listen to you for a couple more minutes.
I fully believe this stock is going to be north of 125 or 150 somewhere in 2026 or 2027. So it's inevitable that you'll make profits with Palantir. We also have to think about the fact that earnings is on February 3rd. So with earnings coming up, there's also the expectations on whether or not Palantir will beat and by how much, or will they miss on earnings. Palantir also has earnings coming up the first week of February on the 3rd. So we also have to.
You just said that. Hang on, let's check him on the chat. Marco, how you doing, my friend? Randy, tight stops on Palantir. Right. I mean, you can buy anything. In fact, who was it that told me this? One of the market wizards. I think it was Tom Basso. I think it was Tom Basso who told me this. He said, you can buy anything. Doesn't matter. Just buy whatever. Just keep your stops tight. Just literally buy anything in the market and keep your stops tight. And then let it run if it works. Because we had that conversation, and he and I did. It was, Tom, I just bought this. I bought these options in the stock, but I'd never even heard of this stock before. He's like, I do it all the time. Tom Basso is like the chillest dude of all time. He's known as Mr. Serenity. He's like, I do it all the time. And I was like, what do you mean? He's like, I don't care. I don't care what the stock is. I don't care what their fundamentals are. I don't care what PE ratio it has. I don't care what 10 Qs and 10 Ks and anything else has. All that matters is price. Is the price going up? Well, by God, I think I'll buy some of it. And if it doesn't go up anymore, then I'll get rid of it, right? Investing and trading can honestly be that hands off, right? If it works, let it run. If it doesn't work, get the hell out. I know it sounds crazy, but like Randy says, you can trade it, just have tight stops on it. Mari says she's out, or is that it? Mari, I'm sorry. My first thought was that you are a she. And of course, if there's a girl in the chat, we get really awkward around here, okay? Like, girls in the chat is like a weird thing, okay? But if you're a dude, then let's go. Glad you're here. Michael Whale says, Palantir has treated me nicely over the past few months, but it will drop quick. $28. I don't know what he's smoking, but it sure is strong. So far, so good. Weather in Germany is ugly, cold, and wet. How's the weather on your side of the pond? My dude, it is 65 degrees here in Texas. However, we just got through a snowstorm. I still have snow in my front yard, which is crazy. We never, ever get snow. We had 6 inches of snow last week. So it's really nice that it's going away. But we are traveling over the weekend. I'll tell you guys all about it on Monday. And we're supposed to be traveling back in more winter weather. It's going to suck, but we'll make it work. Mari, it is. Oh my gosh. Hang on, guys. We got a girl in the chat. Everybody be on your best behavior, okay?
To worry about that. There's some uncertainty around that. If they beat expectations, then the stock is going to do even better. We are approaching earnings season. I do believe as we get out of January, historically the worst month in the year for the stock market, we get past inauguration and we get past all this core inflation and inflation data. Once we get through all that, if it's good and we meet or beat the expectations on all of that, and we get out of the inauguration in January completely, get into February, we got PMI data on the 3rd and the 5th.
I still have my Trump sign in the yard. My wife was telling me the other day, she's like, you need to take that Trump sign down. I'm like, nah. Not until he's in office. Then I'll take it down. We just have to really celebrate that win right there.
When that PMI data comes out, if that's also good and earnings are good, Palantir is going to fly. It's going to be back in the mid to high 70s. If they miss earnings and don't do as well, that could cause the stock to drop into the low 60s or even in the 50s. And we also have to consider PMI data coming out in February. And that would just be a hiccup. Going into the following month and the month after that, PMI data could improve, hypothetically, and their earnings could get better and the stock would just go up yet again. So you can see how it's just noise. You get in now, the stock goes down, goes up, goes down, doesn't.
Clearly, he's very bullish Palantir. Clearly, like it's painfully obvious. It's also obvious that it's mostly pretty nice there in Fort Lauderdale. Glad you're enjoying it.
Matter. It's noise because you're still going to get in at X amount of dollars and you're still going to get out at X amount of dollars. So if you get in at 50 and you get out at 100, it doesn't matter what happens in between. You're still making profit. Let's cover some news right quick on Palantir.
Dude, legit. Only price pays. Then why do you make excuses when price is not paying? Right. Well, if price is going down, just be cool with that. Just be like, all right, cool. See you, deuces. Right. My rules would have me out on a close under the 10 EMA. In fact, there's the slide right there. Those are my exit criterias. Right. If the 10 EMA is broken, then I get out. Right. And so, for example, if I were in this trend, I'm not saying I was, but if I were in this trend, I would hold it all the way to close under the 10, right? You could take a 70% move on a stock like that and be super chill. No stress at all. But when it starts closing under moving averages, that's a red light warning sign. Look at this, right? You had warning 1, 2, 3, 4, 5, 6 candles, 5 candles from the top right there that things were not looking great. And then it went down. How about that? How about that? That guy, the problem with fundamental investing is that you only sell the stock that had good fundamentals when the fundamentals are not fundamentaling anymore. So when do you sell in 50 years? Yeah, exactly.
Here, then I'm going to show you how you can make money selling puts on Palantir, get into the stock, and then be able to sell covered calls. The wheel.
Wait, selling puts on Palantir. First off, no. Listen, I lost. I was first off, I was convinced that selling options was the way to go. Convinced of it, right? I had 83% win rates, right? But I couldn't keep money in my account. It was like day after day, my account was just evaporating, and I couldn't understand why. And it was because while I had 80+% win rates, each one loss would be equivalent to like 10 wins, right? And so the math was never going to work. So every time I lost, it would take me 10 perfect trades in a row to make it back. Please, for the love of all things good, don't sell options, don't sell puts, don't sell calls. If you're going to do that, at least make it a covered call, so you've really limited your risk and you're also collecting the call premium, right? But good gravy. Marco says, snow's fine, just cold and wet's an ugly mix. Sunshine and the heart were always good. I love it. How positive.
Deal strategy and make profits. You can also hold long term because this is where you're going to see the most gains. But if you want to run the real strategy on Palantir, you can make slightly more money than just holding the stock as long as you're selling puts and getting in when the stock falls down. And then as the stock rises, you're getting out selling covered calls. You definitely can make more premium doing it that way. Palantir financial risk of valuation compression may extend to 2025 and entice Jefferies analysts to downgrade the stock to the short side. They warn on Monday at 46 times the enterprise value of the next 12 months revenue, EV, the stock trades are still up 15% year to date and are multiple times higher than the closest software peers. Following massive multiple expansion in 2024, when the token rallied 341%, it now has a market cap of 417 million. Insider selling has raised additional concerns over the past 5 months. Other executives offloaded 600 million, while CEO Alex Karp sold more than $2 billion in shares, a disclosure made under Rule 10b-5.
Oh, wasn't he on the Sean Ryan show recently, Alex Karp? One of them from Palantir was on Sean Ryan's show the other day.
-1, the trading plans. Analysts pointed out that such activity could act as an overhang for the stock. Already.
Okay, since you wanted to bring that up, I don't see any order blocks on top of Palantir. So these could be new all-time highs, because an all-time high is really bullish. Think of it this way, right? If you ever bought Palantir in the history of time and it hits a new all-time high, you're happy, right? Everybody's making money. So I don't see anything overhead resistance wise out there. Michael says, selling naked puts. I'm telling you, you haven't lived until you have, bruh. Yeah, 6 figures at least that I lost on that. Give me a grave.
Palantir's valuation has shrunk 15% year to date from 55x to 46x EV NTM revenue. They likened this decline to post-COVID-19 normalization, with a note that does not seem far off from saying changing interest rates, fading AI hype, and insider selling could trigger further compression. The company's shareholder base has also changed over time, adding to the complexity. Active institutional ownership rose 32% after inclusion into the NASDAQ 100 in December of 2024, up 5 percentage points. This shift could also push down the stock's retail-inspired premium, changing investor dynamics. Jefferies has an underperform rating and a $28 price target, more than 56% downside for the last closing price, says the stock is aggressively overvalued. I don't entirely agree with this. With their increase,
bro, they're coming out swinging. $28 price target. They're like, F your stock all the way to zero. By the way, if you decide to sell puts and it goes to $28, I mean, basically you're bankrupt. So maybe that's not a great idea. Maybe the risk reward on those selling puts is probably the worst thing of all time. Just saying.
Year over year in government contracts, commercial contracts, and their customers spending more year over year. Yes, sure, Palantir has grown to the point where they're not quite worth the price that you're paying right now, but I definitely would not say their true value is $28. In my opinion, it's more like 45 or 50, and you're paying a premium. And considering the baked in future guidance and the potential of Palantir, you definitely want to be adding a dollar cost averaging. I'm going to show you.
Good God. All right, I'm not going to do any more of this video. I don't like this. I don't like it a lot. I don't like it a little. In fact, loathe this video. So let's go rank it. All right. Now, granted, we have very different styles, very different. But what I would really recommend is always, always, always go with being risk first. When you're risk first, then you know what, you can buy whatever, like we talked about earlier, buy whatever, but just know where that risk is at for you. So tell me in the chat, where would you rank this one? I'm going to give this a number 1 forgettable. I'm going to give this a 1 forgettable because I don't want you to listen to his advice in this case. Selling puts on a stock that's going down is a terrible, terrible, terrible idea. Not only that, but I feel like he's so emotionally involved in Palantir's movements that he can't see what's actually happening. Trust me, I've been there, right? There was the second time I blew up my account. I was watching as gold was going down every single day. And I was following this person on the internet that said gold was a lifetime value, right? It's only going to go up from here. It's going to be the best deal on gold of all time. So I loaded up. I bought everything gold I possibly could. GLD calls, GDX calls, GDXJ calls, Nugget, Dust, you name it, I bought it. And as it was going down day after day after day, I was looking at it and I'm like, oh my gosh, I have really effed up real hard. In fact, I remember going to Disney World with my family while that trade was on, pulling up my phone, looking out the window, and there's like this hot air balloon thing over in the Disney Springs area, looking out the window of our hotel at that hot air balloon thinking, what have I done? I have blown up my account a second time. And it was painfully obvious that the stock was going down. And yet I decided to be as long as I possibly could. So do so at your own risk. I mean, you do you. I don't care. But try and learn from my mistakes. Anthony, thank you, my friend. Randy says 3. Marco 5. That guy says 5. 4. And then Sir Corp says 2. Bluefin says 2. How to join the Discord? Dude, it's so easy. After you get your OVTLYR membership, we'll send you a link to, obviously log into OVTLYR, log into the Discord, all that stuff right there. It's super, super simple. Mikey Mike says, I didn't even want him in my peripheral vision. Yeah, done with that, dude. Randy, I will never sell naked puts. Write that on Randy's tombstone. Marco says, I still give it a 5, so bad advice that I could just laugh. Laughing's healthy, so he earns his 5. Okay. So let's do this. We're going to shift gears a little bit now and go over to today's member highlight in the Discord. But before we do that, it's this weekly winner circle. So we are going to have verify I'm a human. Frick yeah. All right. So we are going to have our weekly winner circle. This is something we do. It's fun. We do it in the chat every week. All you have to do to enter the weekly winner circle is go into our Discord, go over to the Share Your Big Wins channel right here, and just tell us how you used OVTLYR this week, right? And you don't have to have a big win. You don't have to have a loss, whatever, right? All we care about is just hearing from you how you used OVTLYR. So what I'm going to do is I'm going to roll through here, and I'm going to list everybody who has contributed for the week. And then you're all going to be eligible for a drawing for a $10 Amazon gift card that we'll do live right here in just a second here. All right, so Michael Wales won last week, and my only rule is you can't win 2 weeks in a row. Sorry, Michael. All right, so let's scroll this down. Dave's in the chat. Dave is number 1. Brian, haven't seen Brian in a while. Where the heck's he at? Port City, that's Ryan, so Port City. Bob again. Dave again. Mikey Mike. Bob again. And that's it. All right. Oh, and Wes. Almost missed Wes right there. Wes is on the line. Mikey Mike's on the line. So I'm going to number you guys. This is 6. So what we're going to do is we're going to go from 1 to 6 over here on random.org. And it is going to give us a random number generator between 1 and 6. When I hit the generate button, one of you lucky 6 gentlemen will be on your way with a $10 Amazon gift card. Compliments of yours truly. Here we go. Are you ready? 5, 4, 3, 2, 1. Number 5, and that is Mikey Mike. Congratulations, Mikey Mike. You won this week. Way to go, dude. All right. Congrats to @Mikey Mike for winning this week's weekly Winners circle. Congratulations, my dude. April's going to shoot that over to you on Tuesday, since Monday's a holiday. So way to go. Cedric, hey, man. Awesome. Can't wait to have you. Mikey Mike, nice. Thank you. You are welcome. Congrats to Mike from Wes. All right. Now, in the chat, though, I do want to talk. Mikey Mike had a question about ATRs. So this is a screenshot that he was looking at. And let me scroll up a little bit. So he's trying to get a handle on the whole ATR thing. I told you this is going to be a long episode today. Enjoy. So on my charts, I have 3 moving averages and then 1 bottom indicator called the ATR. Let's go over to ChatGPT. Let's get ChatGPT to explain the ATR value to us. Explain the ATR indicator. The average true range is a technical analysis indicator that measures market volatility. It was introduced by Mr. Wilder. ATR does not indicate price direction, but it provides insight into the degree of price movement, helping traders gauge how much an asset's price might move within a given period. Okay. So here's the calculation for it, etc. Key characteristics. Measures volatility, not trend direction. High ATRs can accompany both uptrends and downtrends. Mikey Mike, you've been reading Turtle Trader, right? Hang on. We're about to teleport. Y'all ready for this? Right into my library. We're going to pick up. Where's it at? Here it is. We're going to pick up. And we're back. All right. We're going to pick up this book here called The Complete Turtle Trader. Now, Mikey Mike, I think you're reading that one, right? If not, hey, you got a $10 Amazon gift card. You can go get it with that. In here was the first place I remember hearing ATRs being introduced. And the way that ATR works is it will tell you if a stock's movement is getting really big or really small, okay? And when it's getting really small, you can actually put on a larger position because the volatility has come down. But if volatility expands, to keep your risk aligned, keep your risk in check, you would have a smaller position. But also, you can use those same numbers on the chart. And we'll talk about position sizing in just a moment. But on the chart right here, like let's look at this ATR for Palantir. The ATR for Palantir is 4.06, okay? So if I were to trade this, my rule is half an ATR down, so $2 down basically, would be where I would get out. And 1 ATR above is where I'd be looking to roll. So 1 ATR, I put it like 73, right? So that's as much risk as I would take on this trade. Actually, TrendSpider has a thing for this. That's as much risk I would take in this trade. And I would give it 1 ATR to the upside and then look to roll my my options up. But let's do some practical application of this. Give me a moment here. All right. So one thing I like to talk about is how you can trade a stock that's like Coke, which is a really boring stock, versus Tesla, which is a very exciting stock, and have the same amount of risk. Now you're thinking to yourself, well, how do you do that? How do you trade Coke and Tesla and have the same amount of risk? Let me show you how it's done. So let's say you take your account balance and let's go over here. Let's say you've got a $100,000 account. Okay. And let's do Coke and let's do Tesla. So the ATR on Coke as of right now is 90.92. We'll just round it to 93. So it's 0.93. The ATR on Tesla, by the way, what I'm teaching you right now is gold, just so you know. The ATR on Tesla is 23.8. 23.8. So let's say I want to risk 5% of my account in a trade, okay? 5%. That 5% is $5,000, right? Of course. So you take your account balance, multiply the risk that you're willing to trade with, right? Let's say it's 5,000. Okay. Now I divide it by 2 times the ATR. You can do by 1 times, but I like 2 times. 2 times the ATR. So I take that and then I divide this by 2 times the ATR of this one. Oh no! Why is that a pound ref? Oh, I didn't. There you go. Did I do that right? Yeah. And then I take this, divided by 2 times that. Okay. So that tells me if I wanted to trade this, I could trade 2,600 shares, 2,600 shares of Coke, or 105 shares of Tesla. 105 shares of Tesla. So, did I do that right? 1,000. Hang on. That math seems weird. 5,000. No, stop it. Quit it. 5,000 divided by 415. Yeah. So the math, the way that works is you can have, hang on, something doesn't seem right. I say it was gold, and then I'm like, wait a minute, my math doesn't feel right. But you can have basically 23 times as many shares on Coke as in Tesla, right? Hang on, just something does not feel right about this math. What have I done wrong? Yeah, 5,000 divided by 2 times the share price. Wow, 26 contracts. Yeah, legit. Did I do this wrong? Hang on. So if it was $1.50, 1666. Yeah, okay. My math is all right. Okay. Yeah. Now, I'm not saying, oh, duh, Chris. Okay. So this is risk to your portfolio. That's not position size. Sorry. I totally lost the plot there. This is risk to your portfolio, right? You can trade 105 times, what was the current price of Tesla? Is that 414 I saw? Yeah. Times 414. Your position size would be $43,000, which is a lot. But you're only risking 5,000, right? Do you see? Let me explain the difference there, and that's why my head got all confused for a moment, right? If I put on a trade and I want to risk 5% of my account, I can trade huge. I can trade a big part of my account because I'm not risking all of it, right? If it doesn't work, I'm only going to risk 5% of my account. So the only bit that I'm putting at risk of the 43,000 is 5,000. Okay, does that make sense? So that's how the math works behind this, and also why I like to go 2x the ATR. I mean, if you went 1x the ATR, you'd have even bigger positions, right? It'd be twice as big. Yeah, it'd be huge. So that's the way that I calculate position sizing, and you can see the difference here. Yeah, let's do some numbering. Be a little easier to see. $1 million. What's Coke right now? 62. I mean, that's even bigger than your account. That's not right. 2 times the ATR, 2,600. I mean, that would be a giant position. So either way, point is that you can really leverage in and figure out what risk tolerance you're comfortable with. And you've got to figure that out, right? You've got to figure out how much risk that you're willing to take. And if it's 5%, if it's 2%, if it's whatever, right? You can use ATR to determine the position sizing because it gets bigger or smaller, right? So yeah, I hope that helps, right? I know my math was not perfect today. I'm only human, but I automate all that anyway. I just drop it into a spreadsheet and it does all the calculations for me. So it makes it super simple. So that's going to wrap our member highlight of the day. So be sure to share your stories over in the Discord. And the first rule of OVTLYR, you should tell everybody about OVTLYR as well, right? And hit the like button for me already. Now, if I were to trade today, what would it look like? But first, what is OVTLYR and how does it work? Well, remember old Uncle Warren said, be fearful when others are greedy and greedy when others are fearful. OVTLYR shows you if investors are acting irrationally fearful or greedy and by how much, allowing you to get into the stock before the OVTLYR move happens. Now, I showed you that on the Fear and Greed Index earlier on there, right? And you can get access to the OVTLYR annual pass for just 82 cents a day, but that deal ends at the end of the month. So my style of trading, I call the golden ticket trading strategy. It always starts with the market. Let's go look at the market on the SPY. And we can see that we have a little bit of reversal coming in, right? We had been trending down, and this was definitely in a bearish trend. Now it's in a sideways trend, right? You've got the 10 under the 20. Price is now above the 50 right here. And because of that, this is now a sideways trend, not one that I'm interested in. But I've been out of the market since like November 21st, right? Why have I been out of the market? Well, first, we got a sell signal on the S&P 500 on November 21st. So I got out. Additionally, the market breadth has been all over the place. So market breadth, we measure this by how many stocks are showing up with buy signals versus sell signals. And more stocks were going from the buy side to the sell side. And that flipped, actually. The market breadth started increasing around December 30th. So around December 30th, more and more stocks were getting buy signals. So more stocks are getting buy signals while the market's trending down and with the sell signal. Like that's so inconclusive. There's no way I'd touch it, right? So for me, I've got a sell here. I've got a bearish sideways-ish trend right now, and market breadth being bullish. So when all this lights up together, and then you find a stock that has a positive sector breadth as well, that's when I would be looking to go in. But in the meantime, I hang out in cash, right? I trade way less than you probably think you should, because holding cash is a risk-free trade, right? I'm not buying any Palantir with it going to zero. I'm not buying any AMD with it going to zero. Why would I do that? I can just sit on the sidelines and hold cash. Then once the market breadth and market trend both work together, start going up, dude, now we're talking. Now we're off to the races. So no trade set up for me today, but that's all right. Let me know in the chat what you're trading, and be sure to come back tomorrow, where we'll help you save time, make money, and start winning with less risk together as a team. Of course, I'm out tomorrow, but I do have some videos scheduled. Let us know if you need anything over in the Discord, and have a fantastic weekend. Remember, the market's closed Monday. Enjoy the holiday, and we'll talk to you later.